Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 18th of July 2021 and we're publishing our gold and silver weekly update for the week ending the 16th of July and providing our forecast for the coming week. We have to advise that the contents of this video are the same as the normally weekly update we publish on Saturday. However, we have found that using different headings and thumbnails ensure that we reach more people. So if you've listened to our update yesterday, there's no need to listen further. If not, then enjoy and hopefully give us a thumbs up and subscribe. So let's get to it. Gold rose $4 last week, rising from $1,809 to $1,813. Having hit a high of $1,834 and a low of $1,792. That's a rise of 0.2% on the week. In sterling terms, gold finished the week at £1,316. That's up £15. And in euros, it closed at €1,535. That's up €12. Big difference between $4 and £15 and €12, which just goes to show the strength of the dollar last week. Silver fell 43 cents, from $26.13 to $25.70 and below that crucial 26 level, having hit a high of $26.48 and a low of $25.62, a fall of 1.7%. In sterling terms, silver closed at £18 and 66 pence. That's down 14 pence. And in euros, it closed at 21.77 euros. That's down 23 euros. The gold to silver ratio rose from 69.2 to 1 to 70.5 to 1. Bitcoin's down $2,105 from our report of last week and currently stands at $31,285. It's been as high as 34,606 and as low as 31,079. On the issue of Bitcoin, just a quick shout out to our new channel, which is replacing the Richard and Greg channel, and it's called Crypto Plus, where we'll be speaking not just about cryptocurrencies, but definance and alternative investments. We've placed some videos on that channel already, and tomorrow we will be updating Nikki's portfolio. So please don't miss out on that. Going back to the markets, the Dow Jones closed on Friday at 34,687. That's down 299 points on the day and down 183 on the week. The S&P 500 closed at 4,327. That's down 32 on the day and down 42 on the week. The Nasdaq Composite closed at 14,427, down 115 on the day and down 274 on the week. So all the main indices are down. Brent crude closed at $73.59. That's down nearly $2, $1.96 to be precise. And WTI crude closed at $71.81, and that's actually down $2.75 on the week. This is all because OPEC and OPEC Plus could not agree a finalization in terms of supply. The dollar index stands at 92.68. Now that's up 0.55 on the week. And it's this strength that has particularly hit it, the gold and silver markets, and particularly silver. Now, we concluded last week's video with the following forecast. This is what we said. So where do we see gold and silver prices moving next week? Bearing in mind that we are to a very large extent reliant on the movement of interest rates and the US dollar value, and also now some nervousness in the equity markets. So we're raising our gold trading range for this coming week, with gold trading between 1750 and 1875, with 1700 to 1900 as outliers, and silver trading between $25.50 and $27, with $24.75 and $28 as outliers. Well, as we can see, gold traded $42 between its high and low, 1834 to 1792, exactly in the mid-range of our trading forecast. Silver traded as it did last week, within 86 cents of its high, and the range there was 26.48 to 25.62, posting a lower high and a lower low than the previous week, though admittedly marginally so. Again operating within our relatively tight trading range, though towards the lower end rather than in the middle range like gold. Where are all the pumpers calling out this $100 silver? So let's first look at gold and see what happened. Apart from last Monday, gold traded the week in positive territory. Admittedly within a relatively small range, but we did notice a fallback on Friday. The prime reason has been the strength of the US dollar, which began to rise on Thursday, and then more so on Friday as economic data being released either met market expectations or exceeded them to the upside. The dollar's strength, frankly, should act as no surprise to those who listen to our videos on a regular basis, as we recently pointed out that remarks from Christine Lagarde of the ECB suggested that, without stating it emphatically, but suggested that they will relook at potentially introducing other QE methods when some of their existing arrangements end in February-March of next year. A clear signal that loose monetary policy is here to stay, with a currency that is one of the key currencies in the basket of 5 which make up the spot index. The result has been a considerable inflow of monies into the US dollar and bond market. But what really moved things rapidly on Friday was stronger than expected US retail sales report, showing a rise of 0.6% in June compared with a fall of 1.7% in May, and against market expectations of a minus 0.4%. This certainly ensured the further strengthening of the dollar, and the figures, excluding automobiles, showed a positive 1.3% compared with minus 0.9%. From a technical point of view, support levels exist at $1,800 psychological, with perhaps a stronger support level at $1,792, which is the 20-day moving average. Resistance is seen at the 50-day moving average at 1837, and of course psychologically at 1850. The MACD histogram is printing in positive territory, suggesting again higher prices ahead. Looking at silver now, unlike gold, it moved in and out of positive territory all week. It vacillated quite a lot, within a relatively tight margin admittedly, with a significant collapse on Friday. It certainly reacted more negatively than gold did. The technicals show that we have support at 25.55, which represents March lows, and resistance at the 20-day moving average at 26.06. The MACD histogram is printing in negative territory, which suggests consolidation, similar to last week in fact. The key technical figure to the downside, and we have to be aware of this, is $25. If silver falls below and holds this, it suggests a very negative trend for silver, and you could see a rapid deployment down to 24 and even lower than that quite quickly. However, on the upside, we need to see silver reach that all-important $28 level again and hold there before further significant upside can even be contemplated. Looking at the economic data, last week we saw higher CPI and producer price figures, improving jobless claims but lower industrial production. Retail sales, however, blew everything out of the water and truly caused a reaction to precious metal prices due to dollar strengthening, potentially, arguably, in anticipation of earlier interest rate rises in the medium-term future. But, let's be frank, we're still some time off that. This coming week, we have the following economic reports coming out of the United States. On Monday, we have the NAHB Home Buyers Index for July. On Tuesday, building permits and housing starts for June. Wednesday, nothing scheduled. Thursday, our normal weekly jobless claims. But also we have existing home sales and index of leading economic indicators for June. And then on Friday, market manufacturing flash PMI for July and the market services flash PMI for July. So we're quite light on US economic reporting next week, with perhaps the most significant data being the job figures on Thursday, or the jobless figures to be more precise, and the flash PMIs on Friday. On the political front, perhaps the most significant news this past week has been the announcement of a $300 a month child benefit plan, and therefore more money printing to produce that, plus a continuing crackdown on social media companies, with President Joe Biden now stating that a spike in COVID deaths among the unvaccinated was down to social media. So we can certainly see some moves in the curtailment of social media freedoms. So where do we see gold and silver prices moving next week? Well, bearing in mind that once again we are to a very large extent still reliant on the movement of interest rates on bond yields and the US dollar value, and some further nervousness in the equity markets, though they still seem, despite this week's fall, to be pumping to the upside. So, we're leaving our gold and trading range broadly unchanged, with gold trading between 1750 and 1875, with 1700 and 1900 as outliers. And silver's trading range really trading slightly lower, between $25 and $27, with 24 and 28 as outliers. What are your thoughts about where gold and silver prices are going to go? Please share them, and also give this video a thumbs up. It would be appreciated. And if you haven't subscribed already, please do so and press the bell sign. And not forgetting, for those interested in finance, investments, cryptos beyond the normal parameters of this channel, then go to our Crypto Plus page. And we provide links to all of these below. Thank you for listening. Have an enjoyable, safe weekend and prosperous week ahead. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.